All right, let's dive right in. This morning, May 14th, 2025, the pre-market air around RedCat Holdings, ticker RCKey, was, well, buzzing.
Yeah, definitely some movement.
The stock price jumped over 11% to $6.86. And the fuel for that, it looks like a surge in bullish options activity call option volume was double what was expected.
Interesting trigger.
So for this deep dive, the burning question is really, what's truly driving this sudden excitement, especially for a company that seems to be navigating some pretty choppy waters?
That's exactly what we're here to explore. This is a focused analysis of RedCat Holdings, Inc. We've pulled together, a range of research, financial filings, expert opinions, news reports, even some critical takes to really try and extract the most vital insights for you.
Exactly. For you, the learner, our goal is to give you a clear, structured, and hopefully engaging understanding of where RedCat stands right now. We'll unpack their strategic moves, take a look at their financial well-being, and, identify the key factors shaping their future path.
And importantly, we'll try to do it without getting bogged down in too much technical jargon. We're after those aha moments, the things that really bring clarity.
Right. So we'll tackle this in two parts. First half, we'll lay the groundwork understanding RedCat's business, its evolution, how it's changed.
Then we'll evaluate the management team, their recent actions, which are interesting.
Uh-huh. And finally, in this first half, we'll take a detailed look at the company's financial health, past and present.
And then in the second half, we switch focus a bit to the market's perspective. We'll look at that market sentiment we started with.
Yeah, who owns the company, which is always revealing.
Definitely. And then a thorough risk assessment, what could go wrong, before wrapping it all up.
Okay, sounds like a plan. Let's unpack this, starting with Chapter 1, Business Understanding. What is RedCat Holdings, fundamentally?
Well, at its core, RedCat Holdings, headquartered down in San Juan, Puerto Rico, is a drone technology company. Their focus is on providing integrated robotic hardware and software solutions.
Integrated is key there. But what's really striking is their strategic shift, isn't it?
Oh, absolutely. They've undergone a significant realignment. It's more than just tweaking. They've essentially pivoted their whole business model.
They used to serve enterprise, military, and consumer markets, right? Like a broader approach.
Exactly. But now they've made a very decisive shift to primarily serve the military, government, and commercial sectors. The sale of Fat Shark and Rotor Riot back in February 2024 really hammered this home.
Yeah, shedding those consumer brands felt like a clear signal, a big bet on the defense sector, essentially.
It really does. And this pivot is continuing. Just today, May 14th, they announced they're moving into unmanned surface vessels, USVs.
Wow, okay. So drones on the water now, too.
Precisely. And it's not just a toe in the water either. They're talking about a whole new product line, including a pretty substantial 7-meter expeditionary multi-role craft designed for kinetic maritime operations.
Kinetic maritime operations.
Yeah.
Sounds serious. How are they managing that expansion?
They're partnering up, leveraging the expertise of an experienced manufacturer through a strategic partnership to make it happen. It avoids building everything from scratch, presumably.
Makes sense. That's a bold move, though, expanding beyond just aerial drones.
Yeah.
It really reinforces this family of systems idea they talk about, doesn't it? Integrating hardware and software.
It does, and you see that reinforced with their partnership with Palantir Technologies, bringing in advanced AI capabilities. And they've set up this RedCat Futures Industry Consortium, too. It all points towards this holistic, integrated vision.
Okay, so with this shifted focus and new expansion, what does their actual product portfolio look like now? What are the key pieces?
Right, so their main product lines now fall under their subsidiaries, Teal Drones and FlightWave Aerospace Systems, plus the new FA and FPV drones and these just-announced USVs.
Let's break those down. Teal Drones first.
Okay, Teal Drones has the Black Widow. This one's significant because it was the sole winner of the U.S. Army's Short Range Reconnaissance, or SRR, program of record. That's a big deal.
The SRR contract. We'll definitely come back to that. What else under Teal?
The Black Widow also uses Palantir's VNAV for flying in places where GPS doesn't work, and it's waiting to get on the blue UAS refresh list.
Which basically pre-approves it for government use, right? Streamlines things.
Exactly. Then there's the Teal 2, which got attention previously for its thermal imaging capabilities, and the Golden Eagle, which is already DoD approved.
Okay. And FlightWave Aerospace Systems, what do they bring to the table?
FlightWave has the Edge 130 Blue. Think of it as a versatile military-grade tricopter. It does VTL vertical takeoff and landing, has long endurance. and it's also Blue UAS approved.
Any recent wins for the Edge 130?
Yeah, actually. They recently got orders worth over $500,000 for it from the Army National Guard and another U.S. government agency. So it's getting traction.
Right.
They're also developing something called the Trichone, which sounds like an evolution of the Edge 130, a fixed-wing VTOL system for potentially even longer range and endurance.
Interesting. And these FPV drones you mentioned. FPV, that's first-person view, right?
Correct. They're marketing these as the first NDAA-compliant FPV drones specifically built for military precision strike operations.
NDAA compliant. That's crucial for the defense market, isn't it? Means they meet U.S. regulations on where parts come from.
Absolutely key. It gives them an advantage, especially with concerns about foreign-made drones. It caters to that growing demand for secure, U.S.-made FPV tech in the military.
So it's quite a focused portfolio now, especially after shedding those older segments like Skypersonic, Fat Shark, Rotor Riot. Very defense-centric. How does this translate into actual money, though? Where's the revenue coming from, and what are they projecting?
Okay, revenue, that SRR contract we mentioned, it's absolutely central to their projections for 2025. Their guidance is, well, ambitious. $80 million to $120 million for the year.
Wow, that's a big jump from where they've been. How much of that is SRR?
They're estimating $25 million to $65 million just from SRR-related Black Widow sales. On top of that, they project another $25 million from non-SRR Black Widows, $25 million from the Edge 130, and maybe $5 million from the MFPV drones.
So the SRR piece could be anywhere from a significant chunk to over half their projected revenue.
Exactly. And that heavy reliance is a major risk factor. It's something Kerrisdale Capital flagged in their critical report. They expressed skepticism about both the actual size and the exclusivity of that SRR contract.
Right. If that contract doesn't pan out as expected, or isn't as big or exclusive as hoped, that guidance looks shaky. Definitely a point of uncertainty. Okay, let's pivot slightly. Chapter 2, Management Evaluation. Who's running the show?
Leading the company is Jeffrey M. Thompson. He's the founder, chairman, president, and CEO. His background is in tech entrepreneurship.
Wearing a lot of hats there.
Yeah.
Who else is key?
Christian Koji Erickson just came on board as CFO in March this year. He replaced Leah Lunger and brings a finance background. Then there's Sean Webb, appointed president of FlightWave in April. He has significant experience from AeroVironment, a major competitor.
Interesting hire.
Yeah. And Jeffrey Hitchcock is their chief revenue officer. It's also worth noting the departures, though. Leah Lunger, the former CFO, is gone. And George Mattis, the founder of Teal Drones and former CTO, he resigned after they won that big SRR contract.
The founder of Teal leaving after the big win, that seems noteworthy.
It definitely raises eyebrows. We'll come back to that with insider activity.
Okay. And the board, who's providing oversight?
The board includes Thompson, Jessa Friedman, and General Retired Paul Edward Funk II. They also have their annual stockholder meeting coming up.
Right. Now, you mentioned insider activity and ownership. This often tells a story. What's happening here?
This is definitely a crucial area for RCAT. Over the past 6 to 12 months, there's been what you'd have to call a notable pattern of significant stock sales by key insiders.
Like who?
We're talking Thompson himself, the CEO, former CFO Leah Lunger, and perhaps most significantly, George Mattis, the Teal founder who left. Quiver Quantitative tracked 22 insider sales and 0 purchases in the 6 months leading up to today.
22 sales, 0 buys. Wow.
Yeah. The sheer volume, and especially the timing, a lot of it happening after that SRR contract was announced, it really raises questions about how confident management really is in the company's future.
It's hard not to see it that way. Is this being talked about elsewhere?
Absolutely. It was a key point in the Kerrisdale Capital report, and it's reportedly part of ongoing securities fraud investigations looking into the timing of these sales.
Okay, that adds another layer of concern. And overall ownership. Who holds the stock?
Insiders hold roughly 15–18%. Institutions, maybe 19–33%.
Yeah.
And that leaves a pretty large chunk, around 53%, with retail investors, the general public.
So, a big retail base. And that departure of the Teal Drones founder, George Mattis, and him apparently selling off his stock, you'd call that a major red flag.
I think you have to, yes. When a founder, especially the founder of a key acquired technology, leaves right after a supposed major win and liquidates their shares, that sends a pretty strong signal.
Yeah, it certainly does. Okay, let's shift gears now and really dig into the numbers. Chapter 3, Financial Health. What does the history look like?
Well, historically, RCAT has shown revenue growth, but it started from a pretty small base. The trend in profitability, though, is, Well, it's concerning.
How so?
Gross profit has been volatile, and in their most recent reporting period, the transition period ending December 31st, 2024, they actually reported a negative gross margin, almost minus 28%.
Negative 28% gross margin. So for every dollar of drones they sold, it cost them almost $1.28 just to make them, before even considering R&D or admin costs.
That's essentially what it means, yes. It's a critical red flag. It suggests pretty fundamental issues with profitability, even as sales might be going up. Net losses have been consistent and they've been getting wider, and cash flow from operations significantly negative and also increasing, burning cash.
Oof, negative gross margin is stark. What about the very latest results? We just got Q1 2025 today. Any improvement?
It's a bit of a mixed bag, actually. The Q1 earnings just released showed a revenue beat. They reported $2.78 million, which was better than the $2.40 million estimate.
Okay, so revenue beat expectations. That's positive.
It is, but they missed on earnings per share, the EPS. They reported a loss of $0.17 per share, worse than the estimated loss of $0.10.
So selling more, but losing more money per share than expected.
Exactly. The CEO on the earnings call talked about the importance of drones, GPS issues, factory progress, Black Widow updates, the Palantir partnership, hitting the right notes. But that revenue beat combined with the EPS miss strongly suggests that controlling costs is still a major challenge. They're bringing in more revenue, but it's costing them even more than anticipated to do it.
Right. Bringing in more top-line dollars doesn't help much if the bottom line gets worse. Let's look at their balance sheet then. What kind of financial foundation are they working with?
As of the end of last year, December 31st, 2024, they had about $9.6 million in cash and receivables. But they also had quite a bit tied up in inventory, around $13.6 million.
High inventory, okay. Have they raised money since then? It sounds like they'd need to.
They have been very active raising capital. They got $6 million shortly after Q4 ended. Then they secured up to $20 million in debt financing from Lind Partners. The initial $16.5 million of that closed.
Debt financing, okay. Anything else?
Yes. Just last month, April 2025, they did a $30 million registered direct offering, issuing over 4.7 million new shares.
So equity dilution too. How's their overall debt picture now?
It was relatively low at the end of 2024, but that Lind Partners deal significantly increases it. And they've also applied for a hefty $58 million from the DoD's Office of Strategic Capital, so potentially more debt or other funding coming.
And you mentioned an amendment to that Lind debt.
Right. They amended the agreement, increased the total potential amount, and importantly, lowered the price at which that debt can be converted into RedCat stock, which means potentially more dilution down the road at a lower price point.
Okay. So more shares potentially hitting the market. How many shares are outstanding now?
As of May 11th, it was around 85.65 million. But you have to add the shares from that April offering, plus factor in potential future dilution from that convertible debt and any warrants attached.
Got it. And their market cap yesterday was around?
Roughly $527.7 million as of May 13th.
So a $500 million valuation despite the losses in cash burn. That speaks to the market's expectations. What do the key financial metrics look like when you put it all together?
Well, the trailing price-to-sales ratio is very high, around 72.5 times. Investors are paying a huge premium for their current sales.
But the forward PS, based on that big 2025 guidance,
it drops dramatically, down to around 5.3 times. So the market is clearly pricing in massive growth. Price to book is also quite high, around 10.5.
And the margins we discussed.
Gross margin, negative 28%. Operating margin and net margin are deeply negative, hundreds of percent negative in the last reporting period. Debt to equity was low, but as we said, that's increased with the new debt. Return on invested capital, deeply negative. And price to earnings, well, it's not meaningful since there are no earnings.
Right, so currently looks very expensive relative to actual performance, but the valuation hinges entirely on hitting or maybe even exceeding that future growth story. Okay, finally for this first half, what are the professional analysts saying? Ratings, price targets.
There's currently a consensus buy rating, but it's only from 2 analysts covering the stock. The average price target is $8.50, with one target as high as $13. Northland Securities just initiated coverage with an outperform rating and that $13 target.
So the analysts covering it are bullish. Any counterpoints?
Yes, and it's a significant one. Guru Focus's GF value model, which tries to estimate intrinsic value based on historicals and future estimates, suggests a potential downside. Their estimate is way down at $3.33.
Wow, $13 target versus a $3.33 value estimate. That's quite a divergence, a clear split between analyst optimism, maybe focused on the growth story, and a more fundamental valuation approach.
Exactly. It really highlights the different ways you can look at a company like this, especially one in transition with high hopes, but also high risks.
Okay, that wraps up our first half. We've dug into Red Cat's business, the leadership, the insider moves, and the pretty stark financial picture. When we come back, we'll explore that market sentiment we started with, look closer at the ownership, really break down the risks, and offer some final thoughts. Stay with us. Welcome back to the Deep Dive. We're diving into the second half of our look at Red Cat Holdings. Let's kick off with Chapter 4. Market sentiment. We started by talking about that pre-market stock surge this morning, over 11%, and that unusual bullish options activity. What's your take on what's driving that positive feeling today?
Well, that jump and the options volume definitely signal a sharp uptick in positive sentiment, at least for today. The likely drivers. I'd point to a few things. First, the Q1 earnings release. Even with that EPS miss, the revenue beat can catch attention and be seen positively.
Right, top-line growth often gets attention.
Exactly. Then there's the timing of the unmanned surface vessel expansion announcement. News like that, entering a new adjacent market, can generate excitement about new growth avenues.
So, company-specific news is playing a big role.
I think so. And you also can't discount just general enthusiasm that sometimes bubbles up around drone stocks or defense tech stocks, especially if there's a feeling the sector is hot.
So a mix of company news and maybe some broader sector interest fueling this surge.
That seems likely. But, and this is crucial, we have to remember how speculative this kind of interest can be. It might be driven more by hope for a turnaround, by those really ambitious revenue projections for 2025, rather than by the company's current, financial stability.
Yeah, the fundamentals we discussed in the first half paint a different picture.
Precisely. As we laid out, there are significant risks, ongoing controversies, the Carisdale capital critique, the insider selling, the investigations. These create a really stark contrast with that sudden positive market reaction today. The underlying financial weaknesses are real.
Right, so definitely a potential disconnect between the short-term market buzz and the longer-term fundamentals and risks. Okay, let's move to Chapter 5, ownership structure. We touched on this, but let's explore the implications. Who owns RCAT stock matters, right?
It absolutely does. As we noted, retail investors hold a pretty large slice, around 53%. That significant retail base can definitely contribute to higher stock price volatility. Retail investors sometimes react more quickly or perhaps more emotionally to news and market shifts.
Makes sense. Swings can be amplified. What about the other owners?
Well, the fact that insider ownership is relatively low now after those sales, and institutional ownership isn't overwhelmingly high either. It could suggest that maybe the larger, more sophisticated investors are being a bit more cautious, perhaps waiting for more concrete proof of sustained performance or profitability before committing significant capital.
So watching institutional ownership changes going forward could be a key signal.
Definitely. Tracking whether institutions are increasing or decreasing their positions over time can be a useful indicator of their growing or shrinking confidence in the company's strategy and execution.
Good point. Okay, now for a really critical piece of the puzzle. Chapter 6, the risk assessment. Let's consolidate the potential pitfalls we've identified, almost like a SWOT analysis, focusing on the weaknesses and threats.
All right. Based on everything we've discussed, the risk profile for Red Cat is, well, it's quite extensive. A huge one is their heavy reliance on government contracts, especially that SRR program.
We talked about the uncertainty around its size and exclusivity.
Exactly. And beyond that specific contract, just the general volatility of defense budgets and contracts is always a risk. Plus, there's the potential for recompetition down the line. Nothing is guaranteed forever.
True. What else stands out?
Another major risk is execution. Can they actually scale up manufacturing to meet these ambitious plans? Delivering on those 2025 production targets for multiple drone lines, including new ones, that's a massive operational challenge. Carisdale Capital really hammered on this point too.
Yeah, getting the contract is just step one. Delivering profitably at scale is a whole different ballgame. Other big risks.
Competition. The drone market is intense. They're up against established giants like AeroVironment, nimble players like Skydio, and even DJI on the commercial side, despite tariffs. This could really squeeze their pricing and margins. And supply chain issues, especially with a focus on U.S. made.
Yes, definitely. Relying on specialized suppliers and dealing with those hefty tariffs on any necessary Chinese components that could drive up costs significantly. And switching suppliers isn't quick or cheap either.
Okay, and the financial risks we covered, they seem central.
Absolutely. The history of net losses, the negative cash flow, that alarming negative gross margin, These are fundamental financial weaknesses.
Mm.
Their ongoing need for external financing, whether debt or equity, brings risks of further dilution for shareholders, and they'll likely have debt covenants they need to meet, which adds pressure.
What about external factors, regulations, geopolitics?
Those are risks, too. Changes in FAA rules, shifts in the blue or green UAS criteria, changes in defense policy or spending priorities, even broader global instability.
Mm.
All of these could impact Red Cat's business.
And the reputational side, those investigations.
That's another significant risk. The ongoing securities fraud investigations could damage investor confidence, maybe even customer confidence, depending on how they play out.
Any other risks to flag? Just a couple more key ones. Technological obsolescence. Drone tech moves fast. What's cutting edge today might not be tomorrow. Market saturation is another potential long-term concern as more players enter. And finally, just the sheer height of that 2025 revenue guidance. Because expectations are now so high, if they miss those targets significantly, the stock price could fall very sharply.
That's a very comprehensive list of potential headwinds. It really paints a picture of a company facing substantial hurdles, even with the market excitement today. Okay, let's move towards wrapping up. Chapter 7, brief conclusion and our end hook reveal.
Right. So, in summary, Red Cat Holdings is really complex story, almost contradictory in some ways. You have clear high growth potential operating in a very attractive market, especially with that defense focus. That's the upside. But that potential comes packaged with really significant risks and some pretty serious financial challenges that the company absolutely has to navigate successfully. Execution is key, financial management is key.
And it's all happening fast.
Exactly. It's crucial for you, the listener, to remember that this deep dive is a snapshot as of today, May 14th, 2025. The situation with Red Cat is dynamic and likely to keep evolving rapidly.
So after this deep exploration covering the business, the management, the financials, the sentiment, ownership, and those significant risks, here's a final thought we want to leave you with to ponder.
Considering Red Cat's aggressive strategic pivot towards the defense sector and its clear reliance on key partnerships, both for technology like AI and for manufacturing like the USVs, how susceptible is its long-term success to shifts in the geopolitical landscape and, maybe just as importantly, the sustained commitment of its strategic allies?
That's a really pertinent question, isn't it? Their fate seems quite tied to factors beyond just their own execution.
It certainly seems that way.
Indeed. So let's just quickly circle back to that pre-market surge we started with. Now, hopefully, with the full context of this deep dive, you can better appreciate the mix of factors likely at play, the potential growth story that's exciting some investors, but also the very real underlying challenges and risks that Red Cat is facing.
Absolutely. It's definitely a situation to watch closely with a lot of moving parts.
And if you found this kind of in-depth analysis valuable, if you want to stay informed on complex situations like this in finance and tech, please do make sure you subscribe to the Stock Analytic AI YouTube channel. We do these deep dives regularly.
And of course, we have to include our standard disclaimer. Please remember, the information discussed today is strictly for educational purposes. It is absolutely not financial advice. AI did assist in the research and analysis presented here today.
And it's essential you conduct your own thorough research before making any investment decisions. So that final thought again for you to mull over. Considering Red Cat's aggressive pivot towards the defense sector and its reliance on key partnerships, how susceptible is its future success to geopolitical shifts, the long-term commitment of its strategic allies? Something to think about.
Definitely.
Thanks for joining us on this deep dive. We'll catch you next time.